Hey guys, and welcome back to another video on the Stock Kings YouTube channel. And today we will be talking about an analysis on the stock CCIV or Lucid Motors. But first I want to talk again about what the markets were doing today. Taking a look at the S&P 500, we can see just as we called out, it mirrored exactly what it did a couple weeks ago in January, coming down, dipping, just like with the recent dip that we saw this last week. Dip down, touch the 50 EMA, bounce right back up into new highs. And as you can see today on this one daily candle, this is Monday, March 1st. As soon as we touch on the 50 minute or on the 50 EMA last Friday, huge upside candle, huge volatility to the upside. It almost ate up this whole candle here to come back to the upside, and we are very, very close to touching all-time highs. Now, what I recommended to get in on these plays is buy shares of SPY, and as you can see, mirrors exactly the same as the S&P 500. I got in right here on Friday on the end, so 379.89, and I'm looking at some very good returns coming up to 389 already today, and I'm still holding. Also, if you were smart going into last week, realizing that there were dips, you could have traded SPXS, which is an ETF that goes against the S&P 500. So you would have got some good shares here going into that week. You could have bought in at 33.29, gotten out at 36 to kind of hedge your bets against the S&P 500. So yeah, it looks like going into this week, we are no longer, in this downtrend. We're really breaking a lot of new highs going into this week, and hopefully March. I think a lot of the stimulus backing, the Biden administration is really pushing those stimulus checks this coming month. I think we'll have a lot of momentum going upward, and I think we can break this high of 3,900 and possibly even break up into the 4,000 range on the S&P 500. Okay, and now I wanted to take a look at some fundamental analysis on Churchill Capital, ticker symbol CCIV. Closed today at 30.63, had a little bit of a down day today, opening up a little higher than usual. It seems to be that we're kind of breaking into a consolidation. Still very high volumes, as you can see here. This stock, I feel like it doesn't really know where it should be traded at. It's going, very, very high, very, very low, and it's just trying to figure out where it should be traded. If we look at statistics on this stock, we can see that the 52-week change, insane gains. This stock has a lot of potential to go up. It's incredible how high these EV stocks can go. Let's take a look at the company website. They just changed the website, very slick, very modern. It's an EV play, Lucid Motors. They're just starting to roll out this Air Dream Edition, which they plan to sell 577 cars this year, which is awesome. And they're reporting revenues much higher than what Tesla actually did its first year. They're reporting revenues around 50 million, while Tesla only reported revenues around 15 million in its first year. Now that's a little difficult to compare because there's a lot more hype around EV vehicles now than there was when Tesla first started. Tesla really kind of pioneered that, and now there's huge backing for EV vehicles, so there probably will be a lot more revenue. But yeah, there's 577 orders to be filled of this Air Dream Edition, selling at $161,500. Now this car is very expensive. It's their high-end, most expensive car that they're going to sell, and they do have factories already set up to start making these cars and selling them, which is huge. As you can see here, there's the Air Pure selling at around 70,000, and a couple more Air Touring, around 90,000, Grand Touring, 131,000. So their plan is to start with the Air Dream at 161, which is their highest selling car, and then keep moving down until they get to this more affordable Air Pure at around 70,000. And this will be a more commodity car, more people will be able to afford it, and they'll get more sales this way. Okay, and now looking at CCIV at a more technical standpoint, you can see that we've had massive gains. We're used to trading around the $10 range, and then absolutely exploded all the way up into the $65 range. And then, from the last week, we just have major downs. Huge gap here from the $70 range, opening at a 44, closing here at the 35, and now we're currently trading in this, $30 range. It's here. I think we can get some good value though. I think we're consolidating, but I think anywhere inside this range is probably a no trade. So anywhere from the 33, 30 range, I would say is a no-go. Maybe the 27, probably a no trade range. Looking at this on the 4-hour and probably get a better perspective. Yeah, we're really consolidating in this zone. A lot of volatility is in here, so we have up, back down. It's not really sure where it wants to be, so I would be looking for any trade outside of this zone. Shorts below 27.73, and then buys above 33. I would love to see it break the 50 EMA. Take a look on that hour. Yeah, it looks like we came up here to the 200, couldn't break it, and now we're coming back down to consolidation. I think if we get a good pinch on the 50 and the 200, we can get a cross. I think good buys are probably in that range above 33.61. And then I think we have massive potential upside back to where we were before. We could take it up all the way to 63 if you're long term. And then day trades, I would look, because it's consolidating in this range, you could probably look for it to bounce back down off the 200 EMA, and then maybe even the 15-minute you could take up trades on that. But it's very, very sketchy. I would be very careful to be taking those. Long-term plays, I think we're getting good values here. You could take buys above the 33. And then I would probably start taking my partials around here at the 41 to where it was previously, around open time here. So that would be February 21st. Yes. This is where I would start taking partials, and then let your runners continue all the way back up to here. But make sure you are taking profits, and if it does start to go back down below this right here, this 27, I would just cut your losses where they are. Try to mitigate risk. And but I think just because of the sentiment with EVs, I think we're gonna continue this upward momentum, keep going up, and you're getting really good value here in this $30 range, with the possibility to go all the way back up into the 60s and even the $70 range. Alright, and that's probably going to do it for us here on the Stock Kings YouTube channel. Now, to review, we've been talking about the CCIV stock, Churchill Capital, who has recently agreed to acquire Lucid Motors, an EV company. We've been talking about technical analysis, fundamental analysis, with trades above 33.52 to start taking profits around the 41.55, and then potentially this stock could go back to all-time highs of 63.51, and then even keep pushing that, going up to the $70 range. And that's going to be all. Enjoy your guys' day, get those gains, and I'll see you next time.